And joining us now as we recap Monday's market trade action, plenty of downside pressure in the soy complex and in hogs as well. Some green on the screen in corn and wheat and cattle when it was all said and done. John Heinberg with Total Farm Marketing joins us here today. John, good to catch up with you, sir. And overall, looking at that trade to start the week, we eked out some green on the screen in corn and in KC wheat, but for a time there, it looked like pretty broad pressure across the grain and oilseed commodities on the day Monday, John.
Yeah, it was, except for a little bit of buying towards the end of the day in that corn market, which continues to see some decent strength. It's pretty kind of a negative day overall. Talking a little bit of moisture maybe coming in, helping out the Southern Plains, kind of weighed on the wheat market a little bit in that regard. Obviously, soybeans still seeing those Brazilian bushels as well as some of the demand move. Probably from the United States to Brazil. Keep hearing chatter of them buying Brazilian beans or China buying Brazilian beans. Coming into play. So it's a little encouraging at least see the corn market still kind of dig its heels in here today and hold its ground. But again, it's just a very choppy market in a quiet time and feels just like things could be on a little bit of a slippery slope here unless we get some news, one way or another.
Well, and thinking of news, just that was too a lack of fresh news to really start off the week. Obviously, we're watching the South America weather picture. We continue to watch that. I wonder as well, though, dollar up a little bit. I wonder if that maybe exhibited some of the downside pressure on the day with a lack of fundamental news to trade on.
Yeah, in that soybean market, there's just a couple things going. Just like I said, again, hearing talk over the weekend that China was an active buyer of Brazilian beans here for February, March window. It's about the third or fourth time I've seen that type of news story come out. Again, just showing us that our export window may be closing. Now, we did have a good week of export shipments at 1.8 million metric tons. We need to see those numbers. So that'll put a little pressure maybe on the USDA to put those demand bushels back on the pile on the report here coming up this week. So we'll have to watch that. But at the same time, we're still trading about 70 cents or so, maybe above the Brazilian price in terms of per bushel price for March. And that's just going to keep things fairly limited here. Even though the cash market, the domestic side is still fairly strong. And I know talking to a few elevators and they're a little concerned where things could be come September and August, when we run out of the fresh, supplies here in the United States and the commercials are holding it all. So there's still just a bunch of different, stories point in different directions. I think at least in the bean market at the front end, watching what's going on with soybean meal, getting a little toppy there. A lot of length in that market and the managed money side. If we get kind of past that news story that the bean market could be susceptible to some more pressure here, especially as we see those South American bushels come in.
Well, you mentioned bean meal. I mean, I know we touched $500 a ton again and quickly faded off of that. And, I've been hearing a lot of talk as well here, at different conferences and whatnot recent weeks about, looking at this meal market, renewable diesel, crush, but it's something that's a couple years down the road. You and I've talked about this as well. So to your point about the meal market maybe getting a little toppy, I think I'm leaning with you on that one. That's going to be a precarious market to watch in this overall soy complex picture, John.
Very much so. Again, you start talking those historical numbers, $500. That's a big psychological level. Just seems to want to bring the sellers out. That's going to move meal from multiple locations. Even though Argentina is struggling in their meals export numbers, that fires up the Brazilian market a little bit more. It brings a little bit more out of our side. With our increased crush, we got supplies here. So again, it gets to a point where does that become the price that just kind of finally tops this market out? Obviously we get through it, that could kick in another whole round of buying and support this bean market more. But at least right now with the way the money flows, the way that chart looks, the other thing I watch in the bean market too, look at the spreads. What's happening old crop versus new crop. Those spreads in terms of both meal as well as the bean market have really taken off here in the last 2 months. So they're probably getting a little bit top heavy and stretched out here. Then possibly that we need this market to come back down and at least bring a little bit of parity back into those spreads even.
Now, in the corn market, John, I look at, eking out a positive day Monday, still that overhead 690 and that new crop, that $6 mark. Just feels like we're going to be chopping in this range for a while. I don't see anything fundamentally ahead of us here. I know there's a report on Wednesday, USDA report, but I don't see anything fundamentally with that either that could really move this corn market one way or another. I think it's just going to keep us kind of range bound for the foreseeable future, John.
Very much so. It's right now. It's a battle of two different weight directions pulling. First off, you've got the cash market that's strong. You got the basis levels in the western side of the Corn Belt, very aggressive, looking for supplies. And there's also good strength and basis on the eastern side of the Corn Belt as well. When you get out towards the East Coast, and then they're trying to pull supplies out of the richer areas that got them in terms of production, which is the core of the Midwest. So that keeps this market supported. Anytime we seem to fall back, that seems to bring some end user buying in. But then on the flip side, we're so worried about demand to make sure things move. Now, we even got a couple corn sales reported again today. But again, Mexico and Japan buying corn is not going to excite this market because we expect those sales. We need to see that Chinese business, I think, if we want to get some, upside movement. Some things to really kind of keep an eye on going forward, especially with that cash market the way it is. South American supplies are there. There's some bushels coming on board in terms of that first crop corn in Brazil. Does that find a way to American shores? That's something we got to keep a watch out for, especially when you go look at what's happening on the East Coast in terms of basis. It might be cheaper for them to pull a boat up from Brazil and fill some of those needs, and especially in North Carolina, things of that nature. Nothing out there confirmed yet or anything, but that's one of those little headline pieces that could come in and really hurt a market if we see something like that. Because that just also gets us to a point where we have what we call equilibrium and prices can move around. Again, we're still a little more expensive compared to the rest of the world in terms of our price at this time frame, and that's still going to just keep things limited on the export front. Will the USDA address that this week on the report? Is a good question. We'll have to see. Probably not in February. Probably kick the can down the road a little bit here since the export window is kind of opening up and we're getting some sales and some decent movement. But it's still definitely, when we're talking 40-some% below last year's level, that's a bit of a concerning point going forward, that if we can't get this corn to move and we actually even turn to some possible imports.
John, hog market Monday, rough day there. I've been trying to find some sort of an answer to why we had a huge drop in hogs outside of the front month February contract, which I know is kind of converging to cash here as we near the end of that contract. So your thoughts, hogs, if you found anything concrete to see the big down move on Monday?
No, I really didn't see anything in terms of like the base fundamentals on the day. Obviously, cash trade continues to be the big laggard here. Midwest direct cash in the midday was around $71. Again, down slightly from where we were on Friday's closes. And that may be still the biggest factor here. You're looking at getting close to February expiration. That's on Valentine's Day on the 14th, 15th area. Again, we're still talking about a $10 plus premium of the index to that April contract. Flip that around, the April contract to the index. And this market just might be feeling we need to pull the two together. And so that's still probably some of the biggest factor. Throw in the fact we broke to a new near-term low today, kind of caught some people, maybe some people thinking this thing was going to go long, got caught on the wrong side. So we saw some technical washout. The funds continue to push this market lower. Now, commitment of traders didn't come out Friday due to some technical issues, so we'll see when that comes out. But the prior week report, the funds actually went short the hog market, which typically they don't do very long or very often. But in this case, they've got the reason to. Retail values were pretty doggone good today. Maybe nobody believed the fact that we were up $8 on carcasses today and a big jump in the pork belly side. Who knows? Maybe that flipped over at the end of the day. So that'll be kind of a key that we need to see. But right now, it's a hog market that just can't seem to get out of its way. I think the fact that just the market failed to really run out, when it had a chance to here last week, may have just brought the sellers back in to say the better path in this market could still be lower.
And John, in the cattle market as well, before we wrap it up today, a fairly decent day of cattle on Monday. I know still plenty of optimism out there in this cattle trade. Anything you're seeing there as we started off the week?
Cash trade was really choppy last week. Really didn't get a whole lot put together, but we did see some northern dress trade come in a little bit higher at the end of the week after the market closed on Friday. So maybe there's some anticipation. Cattle market's a little short bought that they'll bid into the market again this week. Talking to some of the producers out there again, some of the bids are there for them again, so that maybe we'll see some higher cash trade. Feeders just continue to reflect that tight supply. Between the two, the feeder market, and when you look at the historical values, they got more room to go yet than the live cattle does. Overall. So that's still going to keep some bid in that market, especially with the corn market just really not doing anything. It kind of helps the feeder guys make those decisions of what they can pay and use and go for the long run. A little interesting fact, though, today, back in January 2014, April cattle hit 171.10 as the all-time high. April 24 cattle today clips that mark at 172 and change. So that just tells us where we are in this market here. And watch around the Valentine's Day. That's a historical window. We kind of see some things peak out. So producers just want to make sure you keep some safety valve puts underneath this market. Just with the outside impacts of recession talk, things of that nature, this cattle market is getting pretty long in the tooth in terms of the money flow. Makes me a little nervous here that we could see some type of correction, even if it isn't merited based on the fundamentals.
John, great thoughts as always. Before we let you go, if folks have some questions, I know they can reach out to you and the team there at Total Farm Marketing very easily. How could they get a hold of you?
Sure, love chat with them anytime. Give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And that website of ours is there, totalfarmmarketing.com. Love to chat with anybody. Feel free to give me a call.
John, always appreciate the time. Have a great week, sir. We'll talk to you again next week.
Sounds great. Have a good week.
John Heinberg with Total Farm Marketing joining us here today on Market Talk. I'm your host, Jesse Allen. Have a great rest of your day.